Everyone knows the interest rate you get on your mortgage is a critical step when buying a home. But just how do you know when to pull the trigger and lock in the rate? Working with a loan officer who tracks the hourly market movements of both mortgage-backed securities and the 10-year Treasury yield is critical, as fluctuations in the markets can quickly change rates higher or lower with the simple issuance of a press release. The confusing part for consumers is that they don't have access to this same data, and the news media often uses outdated reports when discussing the housing market and the movement of mortgage rates in the headlines. For example, Freddie Mac releases a weekly rate survey published every Thursday, which is one of the most widely referenced mortgage rate sources and a great way to look at historical rate movements. The problem is that this report contains data that is already almost a week old when released each week and can often be widely inaccurate from reality when markets are moving quickly, so it's not the best way to make a decision on when to lock a rate. Second, each mortgage scenario is priced out differently based on the parameters of that particular loan: credit score, down payment, property type, occupancy are some of the variables that impact rates. Another component is the cost of the rate, or whatever you are paying in discount points or origination fees. There is no one rate for all mortgages, despite what the headlines report. So only your loan officer can accurately quote the pricing for your scenario. Finally, the length of the lock period is also important. You don't want to lock for longer than the time you will actually need to close, as that adds to the cost or increases the rate. In periods of declining rates like we're seeing right now, as the Fed fights inflation, you definitely don't want to lock too early and miss out on potential rate drops by locking early. I typically recommend locking your rate around 2 to 3 weeks out from closing on a purchase. That way you avoid the risk of any short-term rise in rates right at the end of the loan process. You may miss out on a slight dip in the days prior to closing, but more importantly, you're protected from any jumps to the upside that will cost you real money. The important part of locking a rate is having that conversation with your loan officer to discuss not just your goals on payment and your rate goal and the cost of that rate, but also the timing. And you want to make sure if there's a news report that's going to be coming out, say 2 days from now, you want to wait possibly until that report comes out, because that might move the markets favorably to help you get a lower rate or lower cost on your loan. So having that conversation with your loan officer is critical. If you like this video, please give us a like and share, and of course, subscribe to us on our social media channels and YouTube for more updates like this. Have a great day.